Welcome back. My name is Kyla P. Barnes, your financial chef and coach with Jean Glaze Art and Finance. My website is www.onegingles.com. Today's date is April the 5th, 2023. I will be covering some good news towards the top of the month. I'll also be covering personal story, getting into some of the financial numbers, as well as giving you a few things along the video that you can track for future trends. So, I did a thing, right? I did a thing at the top of the month. In the month of March, I released my first book. It's called Pounds or Ounces, Your Financial Blueprint. This book is a really solid primer to add to your understanding of how the financial markets work, as well as how financial structures work. It's a blueprint for things that I have found in my personal journey, going from someone who had absolutely no money to someone who got my first 1,000. Super excited about that. First 10,000, first 100,000, first $1 million. And I found that I was able to reach those points by being consistent in my financial journey, as well as listening along the way. There are some things I really just didn't know, and it didn't matter how much I was married to the idea. If it didn't work, if it didn't produce the results I was looking for, I simply just had to abandon it. So this is my book. It's available on Amazon. Pounds or Ounces, Your Financial Blueprint. Add this to your financial library. Use it for yourself. Give it to someone who is young. Give it to someone who's struggling. Read it for yourself. Break it apart. Talk about it. Let me know your feedback, because I'm open to it, as well as I too still want to learn. I haven't learned everything. I'm not at this pinnacle point in which I can't go higher, I can't go lower. So if you have anything to share about the book, please let me know. It's $25.99 on Amazon for the actual book. It's $9.99 in the electronic version. I appreciate in advance everything that you do to support my channel, to support my growth, as well as Jean Glaze Art and Finance. What has been occurring? Well, the book was launched in March. Super excited about that. In addition, I did take an extended spring break. Yeah, also got sick. I don't know if you know someone else who has this cough / cold / flu symptoms / insomnia, wheezing. It felt like pneumonia. I never had it before. All of the prescribed medicine didn't work. The best thing that worked was staying away from people, honestly, getting a whole lot of sleep, and staying absolutely overhydrated. That was what saved me. So if you know anybody with those symptoms, share, right? That's what makes the world so great, is that we have so many avenues to share. What else happened? Well, in news, the news has been very interesting. If you have been tracking here lately, many stories tend to be colliding with each other. In the month of March, the Federal Reserve increased the rate by 25 basis points in an attempt to slow down the spending of money, as well as to continue tightening money. However, their news came on the trail of two banks closing. The first bank was Signature Bank on the East Coast, and then Silicon Valley Bank on the West Coast. Silicon Valley Bank on the West Coast had a run on deposits where they had wrote a several amount of loans. They over leveraged themselves. They had a fair amount of unrealized assets. And then their balance sheet to the withdrawals and deposits they had was imbalanced. So that does mean that if everybody in the bank wanted to have all their money out, it would make that bank's balance sheet disproportionate, or they just simply wouldn't have enough money to give everybody because it has been allocated somewhere else. The FDIC did come in and seize that bank, which happens to be one of the second to the third times here in the U.S. when the FDIC had to come in to stop actions to halt deposits and withdrawals and to assess the severity of what is happening in that bank. The first time that this happened was in 2008 with the subprime crisis. Now, Janet Yellen did have a talk at a economic forum as well as on Bloomberg.com, and she indicated that we are not experiencing the same jeopardy that we experienced in 2008. Janet Yellen, our former Federal Reserve chairman, stated that Silicon Valley Bank experienced a solvency issue versus the 2008 crisis was based off of the subprime crisis and over leveraging. You could say that they kind of weaved into the same. Most banks have loans, deposits, withdrawals, collateral, non-collateralized loans, HELOCs, mortgages, etc., depending on what banking products that they broker. But most banks have unrealized assets on their balance sheet. Silicon Valley Bank had a considerable amount of them compared to other banks like Citigroup, JP Morgan, US Bank, as well as Truist Financial, just to name a few. The banking solvency crisis, as Yellen called it, created market instability in the month of March. The markets were almost at parity on the year. Most of the sectors were up, except healthcare and energy. At this current time, half of the sectors are up, except healthcare, energy, utilities, and staples. Ironically, for us to be on the cusp of a possible recession, many things are not working as they should to theory. In theory, if we're going to be going into a recession, utilities, energy, and staples and healthcare would be up. However, those are the only sectors that are down. The other thing that we're experiencing at this current time is while the Federal Reserve wants to have inflation be at 2%, at this current time it is at 6%. That still is down from 9% or higher, which is the level we experienced in 2022, but it is not at 2%. The Federal Reserve mentioned the week of March the 22nd that they would come out and raise rates one more time this year and then they would stop. In an effort to decrease the speed of money being spent in the economy, and also the most recent news of the OPEC plus the oil cartel stating that they're going to cut production, that is going to make the Fed's job that much more difficult. So in addition to the market not moving to theory, and in addition to the absolute determination that energy and crude prices is going to go up, it's going to be very difficult this year for the Federal Reserve to possibly hold to only hiking one more time. Can it be done? It's possible. It's possible. The 2022 year had several issues that were still spillover from the 2021 year, as well as supply chain issues, which are ironing themselves out. Many companies during the 2021 year experienced higher costs that they just could not account for. They experienced a shortage in good workers and labor, as well as they experienced a higher cost per unit, which means that they had to pass that on to the consumer. The 2022 year, we did see a higher inflation, but we also saw higher wages. We saw positive GDP growth. We saw higher employment numbers, and we saw lower jobless claims. So all these things give the Federal Reserve the indication that the economy is actually improving naturally, which is a very bullish sign. Going down the numbers, right now, year to date, consumer discretionary, information technology, and telecommunications are the highest sectors in the market right now. They're up over 19%. So if your account is exposed to any of those three sectors, it's likely carrying your account positive. If you have energy, healthcare, utilities and staples in your account, as well as financial now, you will notice that your account is coming under pressure because those sectors at this time are down, and they actually have been down for most of the year, which kind of makes you wonder, are we really going into a recession? The numbers don't indicate that we will. Now, I was watching a story that was ran on Bloomberg as well as on CNBC, and I was watching one on CNN Money, and they were stating that the recession could be delayed to the end of the year, or it could be the top of 2024. With information technology or technology companies, consumer discretionary companies like, the Walmarts, the Targets, the Lowe's, anything that you can go out and buy, but you don't necessarily need. And also with the telecommunication companies like T-Mobile and AT&T and what is that other big one? Verizon. With those companies being higher on the year, it does give us the indication that maybe perhaps, even though the 2022 numbers were leading us into believing a recession was going to come this year at the top, it doesn't look like it's going to arrive the second or the third quarter. This is only just by the numbers. Everything is subject to change, right? I also want to tell you Bitcoin is a trade right now that is up 68%. Bitcoin is turning out to be its own asset class. It does not move to theory. It is highly erratic. Full disclaimer, I don't trade Bitcoin. There are several of my clients who do trade Bitcoin. There are several who choose not to. It is an investment that you have to know how it moves, how it trades, what impacts it, what drops it, and what makes it rise. If you don't know those variables, I would say that's not the trade for you. It's just my opinion, which I'm subject to, and I don't mean any harm by saying that. If you have any questions related to sector trading, cyclical trading, dividend trading, income trading, take the time, go to my website, www.onegingles.com. Look around, surf around, go to the contact us or schedule an appointment. Give me your information, give me a time that works for you, and then we can talk about that. Also, my newsletter I print once a month. It has trading ideas in it. It has things that you should dodge and things you should be aware of. In the month of April, the Federal Reserve is not going to meet, but they are going to meet in the month of May. Also, this upcoming Friday, the market's going to be closed. So if you have a trade on that you're expecting to move by Friday, the market's not going to be open on that day. So you may want to either close it out or expect to roll it out to the next week. The other thing that's really going to move the markets is going to be earnings season. So this is going to be Q2 earnings or Q1 earnings in the U.S. At the top of April, the financial companies are going to report. Then we're going to have a mixed bag of economic data as well as all other companies in different sectors reporting. But towards the bottom of the month, it's going to be driven by tech companies. So if you have a lot of tech in your account, if you have several large information technology companies, several companies that merge different sectors like financial and information technology, or maybe telecommunications and information technology, you can expect that those companies are going to create a fair amount of volatility in your portfolio. It's not to scare you, it's just something to be aware of. So just a few tickers to go along with the information I'm tracking. I typically will look at the top of the month, I'll look at JP Morgan, Citigroup, Schwab, XLF. It's an ETF that looks at several large cap companies in the financial sector. I also will look at IAT, which looks at some of the smaller regional companies. On the tech side, I do look at Netflix, Apple, Google, Tesla, and XLK. It is the ETF that tracks a lot of the information technology companies. For Bitcoin, I look at BITO, GBTC, and I also There's one more, but I can't remember that. But those are the main two that I look at for Bitcoin, in addition to just looking at the actual index for Bitcoin on MarketWatch.com or CNBC.com. As far as sectors, when you're looking at telecommunications, you can look at XLC. When you're looking at utilities, you can look at XLU. And if you're looking for telecommunication, consumer discretionary, will be XLY or even FDIS. So those are just a few securities that I usually will look at in a watch list, which you can comprise free on CNBC.com, or if you have a brokerage account or any other site where you can put in a watch list. Those are the symbols that I use to allow for me to track to see how the market is going. There's a few others that I use as well, just because I find them to be really solid companies that may or may not perform. You can't say that I did not share the information. My name is Kyla P. Barnes, your financial chef and coach. I am at www.onegingles.com as I reach for my book. Bleak! This is available on Amazon.com. This is my author's copy. It is $25.99 for the physical book or $9.99 for the digital copy. Get this, read it, discuss it, talk about it, and grow forward. I will talk to you soon.
So where's the bank?
There is no bank.
So what do we do?
Whatever we want.